Hey tech enthusiasts, welcome to the Monday edition of Tech Stocks Daily. I'm your host, here to bring you today's sizzling market buzz. We're diving deep into Palantir's meteoric stock rise, cracking the whip on Endava's scandalous legal woes, exploring Apple's age verification standoff and red carpet moments, and unwrapping Google's game-changing Play Store updates. Whether you're an investor or just tech curious, there's a lot to unpack. Ready for the ride? Let's jump in and dissect today's top tech stock stories. Hey tech lovers, buckle up, because today we're diving deep into the juicy news surrounding Palantir Technologies Inc., better known to NASDAQ as PLTR. There's a lot of buzz and excitement around this stock, and we're here to unravel why it's trending and catching the eyes of so many investors lately. So why is Palantir making headlines today? Well, to say it simply, the company has been on fire in terms of stock performance recently. Over the past month, Palantir shares have skyrocketed by 27.2%, decisively outperforming the Zacks S&P 500 composites, admittedly impressive but comparatively modest 4% gain. When we compare this with the Zacks technology services industry, which itself only saw a 7.4% gain over the same period, Palantir's meteoric performance becomes especially eye-popping. Palantir Technologies is a company that specializes in big data analytics, and their stock often gets a bump when there's news suggesting imminent business growth or a significant shift in their operations. However, the real magic lies beneath these headlines and their projected earnings, which have been continuously adjusted upwards, a clear signal for investors. For those wondering about the finer financial figures, here's what you need to know. Palantir is expected to post earnings of 0.09 cents per share for the current quarter. Sure, a single-digit earnings per share might not sound like much, but when you realize this is a 28.6% increase year over year, it's evident the company is on a robust growth trajectory. Even more compelling is the Zacks consensus estimate, which has bumped this projection up by a remarkable 46.9% over the last 30 days. Zooming out a little, for the current fiscal year, investors can look forward to earnings projections of 36 cents per share, marking an impressive 44% climb from the previous year. And next year, the golden numbers are currently standing at an anticipated 44 per share, an additional 22.6% increase. The consensus for these figures has also edged up over the past month. But Palantir isn't just about shiny EPS numbers, its revenue story is equally compelling. For the current quarter, the projected sales of $705.1 million mark a 26.3% hike from the same period last year. And looking at the bigger picture, Palantir's expected revenues for this fiscal year are $2.76 billion, followed by an anticipated $3.36 billion for the next fiscal year. That's a 24.2% and a 21.5% increase respectively. Absolutely nothing to scoff at. In their last reported quarter, Palantir brought in $678.13 million, which was a heartening 27.2% growth year over year. And the surprises just keep coming. They beat the Zacks consensus estimate by nearly 4% for revenue and 12.5% for EPS. Not only that, they've done this consistently, outperforming revenue expectations for the past 4 quarters. Now let's touch on valuations, because knowing whether a stock is fairly priced is crucial before swiping right on that trade button. Unfortunately for budget-conscious buyers, Palantir appears a bit steep. According to the Zacks Value Style Score, Palantir is graded an F for valuation, indicating it's trading at a premium compared to its peers. So what does all this number crunching tell us? Despite a rich valuation, Palantir, with its Zacks Rank 2 status, suggests that it might continue outperforming the broader market in the near term. This status is anchored by solid upward revisions in earnings estimates, an indicator often correlated with positive short-term stock performance. So Tech Tribe, keep an eye on PLTR. It seems like this data analytics titan is gearing up for a promising future, chock full of growth and potential. Hey tech enthusiasts, buckle up, because today we're diving deep into the rocky waters surrounding Endava plc, a UK-based IT services firm that's making big waves for all the wrong reasons. If you're an investor or just curious about what's happening in the tech stock world, you won't want to miss this. All right, let's break it down. 2 major headlines today have put Endava plc under the spotlight, and neither is flattering. First up, Braunstein, Gewertz & Grossman, LLC, a heavyweight in securities litigation, has announced an investigation against Endava. This is huge because it hints at potential misdeeds that could affect shareholders big time. So why all the fuss? Back on February 29, 2024, Endava disclosed its financial results for the quarter ending December 31, 2023. Sounds routine, right? Well, the numbers were not just disappointing, they were catastrophic. Endava stated they were £70 million short on their revenue trajectory, nearly a 9% miss from projections. Ouch. On the back of this news, Endava's American depository shares plummeted by 41.76%, or $26.65 per ADS, landing at 37.17 cents by market close. This nosedive prompted Braunstein, Gewertz & Grossman LLC to ring the alarm bells, as suspicious cash movements or performance might indicate foul play. Now for the sequel, another announcement from the same legal sharks has taken this investigation up a notch. They're leading a class action lawsuit against Endava and specific officers of the company. This lawsuit aims to recover damages for those who bought Endava securities between May 23, 2023 and February 28, 2024. The allegations? Oh, they're juicy. The lawsuit claims that Endava engaged in some sketchy behavior, including making false or misleading statements and failing to disclose that 1. Demand for their services was waning, 2. Clients were delaying or bailing on projects, and 3. This double whammy would heavily dent their 2023 and 2024 financial performance. If these allegations hold water, affected investors stand to gain some serious compensation. But remember, if you want in on the action, you've got until October 25th, 2024 to hop on board as a lead plaintiff. Being a lead plaintiff isn't mandatory to cash out if the suit wins, but it gives you a front row seat in shaping the lawsuit. This situation underscores the importance of gut-checking company performance claims, especially with tech stocks that can swing dramatically. Endava's stumble serves as a cautionary tale, reminding us that behind impressive growth narratives, red flags might be lurking, which can result in a financial roller coaster for shareholders. In the coming weeks, keep your eyes peeled for updates. With heavy accusations and class action lawsuits in play, this is just the start of a storm that could reshape Endava's future and its stock market standing. Stay tuned for more twists and turns in this unfolding drama. All right, tech enthusiasts, buckle up because Apple is making waves on several fronts today, and it's not just about iPhones and MacBooks. There's a lot more stewing in Cupertino. First up, let's talk about Apple's ongoing criminal versus superhero saga with age verification regulations. State lawmakers across the U.S. are ramping up efforts to enforce stricter age restrictions on social media platforms and apps, primarily driven by concerns over teen mental health and the not-so-great influence of endless doom scrolling on our youthful generation. In Louisiana, this legislative push even inspired a bill that obliges tech companies to help enforce these age limits. One proposal suggested that app stores like Apple's should handle age verification. However, Apple has been waving the privacy flag, declaring that social media companies are better positioned for this job because, hey, privacy concerns. Apple doesn't want your user data being funneled into third-party apps like it's the latest trend. California's shining knight, Tim Cook, stepped into these legislative headwinds, arguing that websites and social media platforms themselves should enforce age restrictions. This stance put him at odds with Meta and Tinder's parent company, Match Group, who in an unexpected alliance, believe app stores should bear this responsibility. Meanwhile, in Florida, lawmakers are laying down the digital law by outright banning social media for kids under 14 and requiring ID checks across the board. Calling this situation a tech tit-for-tat doesn't even scratch the surface. And remember, this uproar comes hot on the heels of Apple retracting its stance on the right to repair bill, allowing consumers to repair their own devices, showing that even tech behemoths can have humble pie on their menu. Now, shift your mental gears from legislation to glitterati, because Tim Cook also strutted his stuff at the 81st Venice International Film Festival. And what's a tech giant doing at a film festival, you ask? Promoting Apple TV Plus content, of course. Cook was rubbing elbows with Hollywood's creme de la creme, including Cate Blanchett, George Clooney, and Alfonso Cuarón. A major highlight was the upcoming psychological thriller series, Disclaimer, set to make its global debut on Apple TV Plus on October 11th. To seal the deal, Cook and Senior VP Eddie Q even wagged friendly fingers at the crowds like seasoned TV stars. However, it wasn't all red carpets and rosé. Hollywood A-lister George Clooney showed a hint of miffed disappointment over Apple not granting a widespread theatrical release for Wolves, an Apple TV Plus film featuring him alongside Brad Pitt. But hey, you can still catch it streaming on September 27th. As for Tim Cook's retirement whispers, well, they've been enough to shake the apple tree, but Cook remains undeterred, focusing his laser vision forward and hinting that his legacy is best viewed through a crystal ball. So whether it's legislations, privacy battles, or Hollywood glamour, Apple continues to keep its finger on the pulse of pivotal tech and cultural discussions, shaping our digital age one headline at a time. Get ready, tech enthusiasts, because Google is absolutely on fire today. Let's dive into why the tech giant has made multiple splashes in the news. First up, Google finally rolled out a major upgrade to the Play Store. Users can now install and update multiple Android apps simultaneously. Gone are the days of tapping your feet and waiting for one app to finish before the next begins. Now, up to 3 apps can blitz through the download and installation process all at once. This is massively handy, especially when you're setting up a new device or restoring from a backup. Parallel downloading was initially tested back in 2019 and March last year, but now it's becoming more broadly available. So if your device is one of the chosen ones, rejoice and enjoy those sweet simultaneous updates. Continuing the Google streak, they've also introduced support for automatic barcode and QR code scanning in Circle to Search. Yes, your smartphone is now a mini shopping assistant. This feature is rolling out on compatible Google Pixel and Samsung Galaxy devices. Once enabled, Circle to Search effortlessly captures barcodes and QR codes embedded on a website or image by simply long pressing the home button. Instead of you doing the heavy lifting of circling the code, a new chip pops up with a URL directing you to the information. It's almost like a magic trick, but for your phone. This nifty QR code feature was first detected in the beta version of the Google app, but now it's out and ready to make your online experience smoother. Samsung fans get an extra treat here, as Google's expanding Circle to search to more Galaxy devices like the Galaxy Tab S9 FE and Galaxy A series models. Not stopping there, Google announced updates to its minimum quality standards for Android apps. Starting August 31st, low-quality apps will either shape up or ship out of the Play Store. This means a cleaner, higher-quality experience for all of us, as app developers will have to adhere to these beefed-up standards. Perhaps Google's aim is clear. They want the Play Store to be the Ritz-Carlton of app marketplaces, not some dodgy motel with flickering neon lights. Oh, and one last spicy tidbit. Google has hinted at a new feature named App Auto Open that will automatically launch an app once its installation wraps up. Intriguing, right? Imagine your app just pops open like a digital jack-in-the-box, ready for action as soon as it's downloaded. So what do you think about these updates? Is simultaneous app downloading the game changer you've been waiting for? Are you excited about Circle to Search getting QR and barcode scanning? Or maybe you're curious about Google enforcing stricter quality controls on apps. Drop your thoughts in the comments below. We love hearing from you and can't wait to see your views. Is Google making smart changes or missing the mark? Let's get that conversation rolling. Hey tech aficionados, today I'm putting one tech titan under the spotlight based on recent news, and the lucky feature, drumroll, Palantir Technologies Inc. So should you sell, buy, or hold Palantir stock given the sizzling hot updates we dissected earlier? Here's the scoop. Palantir's recent stock performance has been stellar, climbing by a whopping 27.2% over the last month. Meanwhile, their EPS and revenue projections are cruising toward the moon with upcoming earnings expectations seeing impressive hikes. We're talking a year-over-year spike of 28.6% and scaled-up forecasts for the next couple of fiscal years. On the revenue front, they're eyeing a 26.3% surge for the current quarter, and the upward adjustments on their consensus estimates tell a compelling growth narrative. So far, sounds like a dream, right? Well, almost. Here's the plot twist. The stock is considered expensive compared to its peers based on valuation metrics. According to its Zacks Value Style score, it earned an F, meaning you're paying a premium for those enticing growth prospects. And as much as Palantir's upward revisions and robust financial performance might make investors drool, this F rating is like finding out your pricey date only knows fancy seafood joints when you're craving a hot dog. Given today's revelations, my take is a hold. The stock's been performing impressively, and there's no imminent sign of cooling off. However, its rich valuation might give prospective buyers pause. If you're already in on Palantir, it looks like the ride isn't over just yet. So maybe keep those seatbelts fastened and enjoy the journey. New investors might want to watch a bit, wait for a more favorable entry point, or see if any significant dips make it a more attractive buy. And of course, don't brush aside the importance of considering your own risk tolerance and investment strategy. As always, folks, do your own research before making any investment moves. The world of tech stocks can be as exhilarating as it is unpredictable. Drop your thoughts below. Are you swayed by Palantir's growth story, or is that F for valuation giving you cold feet? Let's hear it. Whoa, what a roller coaster of a day on the NASDAQ. From Palantir's stellar leap in earnings projections and revenue growth, to Endava getting caught in the crosshairs of major legal troubles, plus Apple's balancing act between privacy stances and Hollywood glitz, and Google's sweeping upgrades to Android functionality, it's been a day packed with highs and lows in the tech world. If you found today's roundup insightful, make sure to smash that like button, subscribe to the channel, and share this video with your fellow tech enthusiasts. And don't forget to join us again tomorrow for another crisp and exciting tech update. Stay tech savvy, folks.